All right. So I went down and tested the low. Made a new low, 67.10, which is actually just a little touch below the December low, out on the monthly. So that's a new breakdown. Mean reverted into the midday and closed just above last night's implied move, but just below this morning's. So options from last night were a little overpriced to the downside, but as of this morning, anything bought it this morning, not so much. Um, to the upside, we tested 68.43, failed the test on ES. Got a rejection, but it's not clean. We need to see a failure of 68.12 to confirm that this is rejected. So far, that seems to be holding up. We'll see how that does in the overnight. Obviously, overnight uncertainty has been increasing volatility and driving sell-offs, and now we have trade issues with the EU to compound what's going on in Iran, which is going to be an issue. So things getting a little bit more bearish. Additionally, we had a big move today, so like almost 100 basis points, and that's gonna push HV10 back up, and it's gonna narrow the VRP and make put selling a little bit riskier tomorrow, which is something we've needed. Obviously, Friday, well, actually, Friday and Monday, the spreads on like the VRP on the front end has been pretty fucking wide. I mean, very positive. I think it was like 0.4, and then it moved up to like 0.8 going into this morning. So with those narrowing, the incentive to sell puts won't be as great as it was the last couple of days. And so mean reversion for bulls will be harder, especially if this opens lower than it closed. So if we continue to see this like overnight sell-off pattern, that's going to get a lot worse for bulls, especially with more variance in the close over close day to day. Dollar up, a pretty strong move to the upside, 50 basis points, and yields bouncing back, especially the 2 5s and 10s, but a little bit at the top end too on the 20s and 30s. Commodities pulled back a little, but oil's still up 4.3% for the day. The U.S. is guaranteed to ensure the Strait of Hormuz shipping is probably not going to be considered all that bullish, but it does provide a layer of support, or at least confidence that the Strait isn't going to close. If it ever becomes official that the Strait is closing, oil's going to like $100 a barrel instantaneously. So they're probably trying to offset that damage as much as feasibly possible. Gold and silver down hard today. Gold down 3%, silver down 7.68. This is likely on the dollar climbing. Correlation moved up into the end of the day, as did 3-month correlation, roughly around the time the trade talks started to break down between Merz and Trump. EU's stance is going to probably remain that the new tariffs are being unilaterally applied, and it negates the prior trade deal, and they're probably unlikely to accept a worse one. But we did get a pullback in correlation, still higher lows. So people not piling into dispersion as hard as they were. And then, we could see this continue to break down overnight. Bond volatility is now up a pretty decent amount, back to at least like historic low levels, getting closer to them, which is a fairly big move. But as 3-month correlation continues to rise, we'll probably see more bond volatility. Leverage in the carry picked up with the rise in the dollar. Leverage on the front end as well as the top end, but forward yield on volatility moved positive to 7%. And that is now greater than the 10-2 year. So, we're probably going to get more increasing demand for long vol, which is going to push backwardation steeper. Gold silver sell off pushed the the margin premium down pretty hard on silver, down to like 1.2%. But this looks like it's kind of shallowing out into the midday. It might start to turn around, and gold and silver might start to stabilize a little bit again over like the next 2 days, I would say. Skew popped. Breadth still actually pretty decent. We'll see what today looks like, but probably a big dump in stocks above the 200-day moving average, with NASDAQ and Russell down so hard. I would imagine they're down a bit harder than the ES, but otherwise things should stay roughly the same. 20-day movers probably fell off. 10 2-year pulling back more to 0.55%. And the SOFR IORB spread is still widening. So this is the main thing that we want to watch at this beginning of the month sell-off. Is we're seeing like real time SOFR futures moving up, and we're seeing yesterday's SOFR rate move up. Still below the standing repo facilities, but enough of a spread that selling equities for cash is beneficial. Right now it's 6 points, but if that expands more tomorrow, very bearish. Obviously, back in December was the last time we saw those rates, and this was the end of year move up above the standing repo facility rates. But this was a decent sized OPEX, and it doesn't look like people are positioning real hard following it. Like Delta and both the SPXW chains stayed fairly low. I would say Delta across the market's not really picking up very much, but there's a lot of uncertainty. And so we may get another couple more days of this spread continuing to expand and tightening up that like the cost of short-term cash. Like the 3-month is sitting at like 3.68% right now, which is also above the IORB rate. It's not a great look. Got a big pop in vol. VX moved up to like 25 today, but ended up closing around 22. This is the first like significant upside break in correlation between VX and cash VIX, and that's kind of what we were looking for after this period where we got a little bit of vol shorting over the last 4 days and correlation came down. So this move up in correlation, although still fairly small, is somewhat significant, and that came alongside a big move in volume on VX up to 231,000 contracts from like 100 and 110 over the last like 4 days average. Leverage fell again, and this time leverage is falling with a drop in SPX, which is probably notable. Last time leverage got this low was like June of 25, coming out of the April crash, as the market was recovering. So I would actually look for leverage to reverse if we start seeing like a lot of put leverage come in, but we're not seeing that yet. Volume today on the sell-off a little bit higher than Friday's, but lower than yesterday's bounce. And out here on the technical side, yesterday we failed the diamond top on the daily. Today we moved up to retest the trends. We failed that. That's not a good fucking look. This is a little off, but failing to break back up above the trend probably means we revisit the like local lows. So I would be looking towards like 67.20 or 67.10 for a retest to the downside, and see if there's any stabilizing support around the 6700 level. If that's lost, the next step down is 65.20. So it's a pretty steep drop, and down by like the 200 MA. 65.70. So if this layer of support is lost, which is mostly held up since December, it opens up quite a lot of downside. And I think that's about it. Nothing really doing too well today. despite the bounce back, everything pretty broadly sold off. I mean, I guess retail trade kind of held its own, so did tech services, but some of this is just bullish going into tomorrow's PMIs. So that could easily reverse, and then financials probably suck. So. And lastly, I think crude light at 74.50 a barrel end of day, and I think Brent was like 80.40. So there's a lot of risk premium that needs to be priced in for oil and oil volatility. That's also going to be affecting equities as well. Anyway, that's it for today. Thank you guys so much for tuning in. I hope you did well. Catch you later.